Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures. It's a daily chart, and what we saw yesterday was a third day of resistance at the 100-day exponential moving average. The bears have been able to push that from the 2014 area back to around 1989 to 1991. We're seeing decent support and a decent bounce off of that area. We've traded as high as 98. The daily pivot today comes in at 1999.42. So what it looks like to me, at least initially, is that we are heading up from the 91 area, which was going to be decent support to retest the daily pivot. What happens beyond that into RTH, we'll have to see. But ultimately, you've got 2014 as resistance to the upside for 3 days. And you've got the 100-day exponential moving average, linking up in that area. The bears have broken the low from yesterday. What they need to do in the regular session is to continue to push their advantage. I would say that a close below the daily pivot is what they want. I mean, that's what they need. What they want is probably to go ahead and close it, say below the 87 area to get it down into the weekly pivot area at 86. If they could get a full-blown test of weekly pivot, that would be probably what the bears would want to get done today. If they could break the weekly pivot, even better. If you're the bulls, you just want to hold this area. You want 89 to 91 to be support. You want to take out the daily pivot at 99, and you want to get back to work on 14. If we make it back to 14, it's going to have to be a breakout for the bulls. You just cannot keep heading up to a major moving average and failing it day after day after day. Eventually, those dip buyers will say, look, I can obviously get better value lower. I'm going to step aside, and that's when serious pullbacks happen. Would it be healthier for us to go down and test, do a full-blown test of the weekly pivot, or even a full-blown test of the middle band? Probably. Whether that happens, though, remains to be seen. If the bears can't push this any farther than 89, then they're a lot weaker than even I had given them credit for. They've allowed a multi-day rally. They do that. I mean, that's what the bears have been known for, not being able to close the deal. They're in the course of this rally, they've lost the mid-band. They tried to hold the 50-day exponential moving average right in this area, but they were unable to do so. They're trying to now hold the 100-day exponential moving average. If they're unable to do that, then certainly we go to the 200, and potentially we could, end up on an upper band ride. So the bears are nowhere near out of the woods. Bounces are going to happen, but it's up to the bears to contain those bounces, and a good place for them to contain it this morning would be the daily pivot at 1999.42. Okay, everybody have a fantastic day. On an administrative note, I had a family issue come up. I'm not going to do a webinar after the close today. We'll just push that back to the regular time next week. We'll do one on the 21st, so apologies for that. But we'll certainly have plenty to talk about by the 21st. So check out the website, PrincetonTrader.com. Come check out the chat room. I will be back tomorrow morning with another webcast. Trade 'em well, everybody.